Welcome, ladies and gentlemen, to the Undervalued Investor YouTube channel, where today we're taking a look at 3 growth stocks that I personally believe have been underappreciated by the market. If that is a conversation you'd appreciate, as always, do the channel a favor and hit that like button, because let's kick it off with, first and foremost, the world's most powerful electric powertrain outboard motor. We're talking about Vision Marine Technologies. They want to do a licensing system with traditional OEMs to scale up the electrification of the boating sector. Vision Marine trades on the NASDAQ under VMAR for around $4 a share, or a $44 million market cap. Based on recent filings, we've seen some pretty reasonable revenue growth, basically off the 6-month end for February 28th, 2023, doing about $2.23 million in revenue versus 1.96, and still seeing yearly quarter-over-quarter growth. From the asset to liability standpoint, this company was sitting on 23.7 million of assets, of which 4.1 million of cash, against a total liability of 10.4 million, putting them in a fairly robust situation for, again, this tougher market environment. In recent news, this company did announce they're going to be traveling 1,050 nautical miles, setting a world record from basically Virginia to Miami. And if we go back, we can take a look. They also partnered with 4 Oceans to help clean up some of the coastlines, removing some of the plastics and garbage that build up in our oceans. Moving into number 2, let's talk about Nubeva, this ransomware reversal cybersecurity company, basically claiming 100% of victims had cybersecurity and backup systems already, yet attacks are rising and 72% of victims pay. Over 80% have permanent data loss, and the average downtime is 21 days. This company has been scaling dramatically. Nubeva trades on the CVE here under NBVA, currently trading down about 53%, but it has been fairly cyclical through some big ups and some big downs. And personally, I think it's trading at a discounted area here as they look to get through a path of profitability in the next year. They're sitting on total assets of roughly 3.6 million against total liabilities of only 330,000, which is very incremental. This company is in a very healthy place, with most of that being cash based off January 31st of 2023. But where things get intriguing is from the revenue basis. Basically, for that 3-month end here, we can see they did $971,000 of revenue versus 55,000 the same time last year. For the 9-month, 1.1 million versus 115,000. This company's technology is starting to take off and scale in a dramatic way. They also just announced that they've proven this kind of rigorous testing through a third party called MISI, which basically helps connect U.S. cybersecurity companies in command with the U.S. government. And getting this, incredible result from this third party really proved out their technology. Leading us into number 3, a 3D printing service company called Shapeways. This company reduces assembly time, has fast turnaround, and reliable quality, with 21 plus million prints already, 10 plus 3D printing technologies, 90 plus materials and finishing, and 160 countries shipped, with over 1 million customers served. Shapeways, trading on the NASDAQ under SHPW, has been roughly flatlining for this year with some volatility in their stock price, with roughly a $24 million market cap. And in the recent filings here, again, taking a look at some of those earnings based off, again, June 30th, 2023, some earnings that were just announced, we can see they sit on a total asset of about 66 million, basically versus a total liability of only 11 million. Again, these companies have an incredibly robust balance sheets to basically survive any kind of short-term economic environment. We can see that their revenues have been growing from 16.6 million versus this time last year on the 6-month end of 16.03 million, roughly flatlining for the year over year on the quarterly side of it. But this company is in an incredible place to take advantage of the future of 3D printing, with recent news showing that Shapeways secured a multi-million-dollar medical contract, realizing a 3x growth within its medical base in the past 4 years, touching many different sectors of the market. They are doing a lot of other things, like Shapeways announced tier 1 supplier manufacturer contracts, and they also announced a reverse 1-for-8 stock split, basically in the volatility of their stock price, trying to ensure themselves to remain listed basically on the NASDAQ. But this is a very intriguing conversation nonetheless. Now, all 3 of these stocks, I believe, not only have a very healthy balance sheet compared to many small caps that do exist out here, but all of them are in dramatically different sectors with huge growth potential into the future, especially as the economy starts to level off as we head into a lower interest rate environment into the coming future. But that is a question I will pass off to you. I'd love to know what you guys think in that comment section below, and consider subscribing for more stocks I will review down the road.